Hello, trading is closed on March 21st, 2025. As always, we'll do our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Monday. Monday is March 24th, 2025. Remember, I can change my plan. My plan can be wrong. Trade at your own risk. Also, for the next couple of weeks, I have personal business. Won't be able to watch the market every day. The market always makes its biggest moves when I'm not around, and there's a chance I might not be risking my own money on these calls. So bear that in mind, because if I'm wrong about this, I'm probably not going to be around to cut my losses. Doesn't make me wrong. Well, we look for the pattern. Look for the pattern today with the early low, and that's what that was. We had mixed signals. The commonest thing is a gap and prompt move outside the day's range. Next most common is close, little change, big move the next day. Well, we gapped and promptly moved outside of yesterday's range. We got that. We don't have to do anything else, but the next most common is to close, little change. I define little changed as 0.25% or less. That's 0.08%. So we got that too. We closed little change, and although we don't have to get a big move the next day, I think there is a good chance we're going to get that too, because things are playing out according to plan. Let's take a look at the intraday moves. We had an ultimate buy signal in the morning pattern. That certainly worked. We had an ultimate sell signal. We got enough to satisfy it. MEJT said all these squiggles weren't the real thing. We've already retraced, so that's played out. Let's not forget that we're still under the weekly Bollinger Band, lower Bollinger Band, and prices just don't stay there long. And also, sentiment indicators are at levels seen only at major lows. So even though you might have earth-shattering drops like we had this morning, I don't think they're going to stick, and I think we're going to go higher. This was, to me, a panic sell. Futures are slightly down, and then an hour before the open, there's a total collapse where you can't take out the prior lows, and you can't make any headway on the downside. That's a drop to support, but not through support. And when you drop to support, either you gap under it. That's just not the place to look to initiate positions, if you ask me. At least on the short side. I wouldn't do it. Well, let's take a look at the longer term picture here. We still think we're in wave 3 of multiple degree. We had our 1, we had our 2. We're in wave 3, we've had our 1, we've had our 2. And now we have to find some way to count the wave since we hit this low recently. Well, here we are, just a blown up view on the 65-minute chart. And we're looking to count this move here. So we'll focus in on this on the 5-minute chart. This we had as 1, and we're going to argue that wave 2 is over. We've looked at this wave 1 any number of times. Here was your A, here was your B. Let's examine wave C. In wave green C, we have an A, we have a B, and the height of green C is equal to 1.618 times the height of A of C. So A and C of this ABC for green C have a fib relationship. If you look at this down move here, you can count a clear 5 waves with perfect fib balance. Wave 5 is equal to wave 1, just like the book. Wave 2 is equal to wave 4, and you're clearly starting an impulse up. And just to make life interesting, green C, here's the height of green C, here's the height of green A, just like the book. I mean, A equals C, you've got a perfect wave balance there at the bottom. I think that's it. We're starting an impulse. Here's 1, here's 2. This reminds me of a scene from Woody Allen's 1975 movie Love and Death, where he's standing in front of a drill sergeant in the army, and the guy's having him march, and he says, 1, 2, 1, 2, 1, 2, and Woody Allen says, 3 is next. What else could that be? Now, I don't know how to trade the FOMC announcements with any great degree of skill. This is an old one, this is the current one, but once these prices print, I think it helps me trade. We gapped down under it, that put us in bear territory, and as long as we stayed there, we had a target 55, 61, 47, and there's no reason we couldn't hit it. Here we go back up, staying on the bear side, come back down. If we're going to stay there in bear territory, we should keep dropping. Instead, we rally past the FOMC announcement price, we test it thoroughly, and then zoom up. I'm interpreting this as an inability to maintain a break into bear territory with leg 3 of the whipsaw ending early. And once that pattern's completed, and we start up like this, I don't see any reason we're not going to keep going higher. Now, of course, any move needs confirmation. If we don't continue higher, it's pretty bearish. I mean, if we open down here, then forget everything I say. But you almost always, when you rally all day on a Friday, follow through. And if we do follow through, I think we could go much, much higher. We didn't hit our 56.7720 target, but it's still on tap to print at some time. When you gap down like this, the time is off the table, but not the price. It shouldn't be too hard to go through this pretty quickly if I'm interpreting this correctly. And you recall from yesterday's video, we have a inverted diamond on stilts in futures. Once you go past this, you go past it in grand style. This could be a wave 3 of multiple degree and have a huge rally. And if I'm wrong, it should be clear pretty easily. And it should be clear that I'm wrong quickly and easily if I am wrong. And if I am wrong, I wouldn't stick around waiting for it, because this pattern should not delay. This really should keep going up. And if we trade back under this again, then I'm just wrong, and I've been wrong before. I don't think I'm wrong now, but we shouldn't go under this. We should just keep going up. And if not, then I'm not interpreting the pattern right. These are the patterns for next week. Once again, I won't be around every day. I'm going to still try to make videos at night. Monday's pattern has a yearly low regardless of where we open. Typically, it's a bullish day with a high in the final hour, but if it's weak, we should see more weakness. Prices, that doesn't mean that you have to close lower, though. Prices rejected the move below the FOMC announcement price. This needs confirmation Monday by continuing higher, but for now, I'm interpreting this as the 3-leg FOMC whipsaw having completed, with the last leg finishing short of its usual target. A day-long rally on Friday nearly always follows through at Monday's open, and is negative if we gap down instead. There's a clear wave count saying we're in wave 3 of multiple degree. When it's that pretty a count, I'm not going to fight it. While other counts may work, I'm going with that interpretation till events prove me wrong. This is a very bullish pattern. It's a rejection of a break lower. We need follow through and don't risk money if we don't get it, but this is just about a perfect set of it for a bull. It's the pattern Monday with the early low, but don't forget that's normally a pattern that closes near the high, and I'd be a bit surprised if we didn't. Just remember I've been surprised before, and that's today's call.